Chapter 4, Process Costing. Hello all. Chapter 4 introduces us to process costing. For this chapter, you must know 1, the difference between job order costing and process costing. 2, the flow of cost in a job order costing system versus process costing system. 3, the role played by materials inventory, work in process inventory, and finished goods inventory in the production process. 4, how to journalize and post entries of a process costing system. And 5, how to compute the equivalent units of production, how to calculate the cost per equivalent unit, how to assign costs to units, and how to prepare a cost reconciliation report. As you learned in the previous chapters, job order costing is used in situations where many different products are manufactured, each with individual and unique features. A process costing system, on the other hand, should be used in situations where a homogeneous product is produced on a continuous basis in large quantities. Examples would include paper manufacturing, petroleum, chemicals, steel, textiles, lumber, computer chips, breakfast cereals, cola bottling, and food processing. The illustrations show how job order costing tracks direct material, direct labor, and manufacturing overhead on a job cost sheet, and how all costs flow through the work in process inventory account until they are completed and transferred out to the finished goods inventory account. As you review the process costing illustration, note how our focus changes from job cost sheets to departments, with each department having a work in process inventory account. Direct materials, direct labor, and manufacturing overhead may be added to work in process inventory for each department until the product is completed and transferred out to the finished goods inventory. Both costing systems have similar goals, as each seeks to assign production cost to output and determine unit product costs. Both systems track the same cost flows: materials, labor, and overhead. Both systems have similar chart of accounts, and both systems use predetermined overhead rates to apply overhead. So what's the big difference? In process costing systems, production costs are not traced to individual units of output. Costs are assigned first to production departments and then to units of output as they move through the departments. Since process costing is done at the department level, each department will have a work in process inventory account. This slide provides examples of journal entries. Remember, when journalizing transactions, debits must equal credits. Look carefully and you will observe the similarities between job order costing and process costing. The big difference again is the existence of a work in process account for each department. Costs flow from department to department as what gets started or transferred in one department will get transferred out as it moves to the next department once the departmental process is completed. Once the entire manufacturing process is complete, the product will be transferred from the work in process of the final department to the finished goods inventory, where it will remain until it's sold. As dictated by the accounting cycle, all journal entries must be posted to the general ledger so that their account balances can be readily determined and reconciled. General ledger postings are demonstrated in the classroom with T accounts. Process costing systems use one of two methods to determine the cost of goods manufactured, either the FIFO costing method or the weighted average costing method. In both costing methods, direct materials and conversion costs are calculated separately when determining what is known as the equivalent units produced, or EUP. Recall from Chapter 1 that conversion costs include the direct labor and manufacturing overhead required to convert direct materials into completed units. Direct materials may all be added at the beginning of the manufacturing process, or they may be used evenly throughout the process. Conversion costs are generally assumed to be incurred evenly throughout the production process. The methods of calculating equivalent units of production are different between the weighted average costing and the FIFO costing methods. Because this is an introductory course, we'll focus only on the weighted average method. Students moving forward as accounting majors will learn FIFO costing in their cost accounting class. In manufacturing facilities, equivalent units of production are calculated to determine the value of a department's work in process inventory at the end of an accounting period. Equivalent units of production represent the number of completed units that could have been produced using the direct materials, direct labor, and manufacturing overhead inputs actually consumed during the period. Determining equivalent units of production under the weighted average method requires that you know the percentage of completeness for the ending work in process inventory with respect to direct materials and conversion costs. Separate percentages will be presented for each type of cost. The term equivalent units defines the number of completed units of a particular item that the company could have produced given the amount of costs that were incurred during the time period for all items not yet completed. Understanding equivalent units of production is key to understanding process costing. The best way to understand equivalent units of production is to do drills or work an example. This slide links the process costing steps to a completed comprehensive problem for process costing. The first step is to analyze the inventory flow. We determine the beginning work in process inventory for the period. We add units started or transferred in to get total units of production. So in this case, we had 200 units in the beginning. We started another 5,000 units. So total units of production, 5,200. We transferred out 4,800 units. Those represent the units that we completed. So if we had 5,200 units in production and we transferred 4,800 out, our ending balance for work in process inventory is 400 units. Make sure you understand that in this step, no dollar amounts are involved. We're just trying to figure out how many units we have in that work in process inventory. Our second step is to convert the work in process inventory to equivalent units. For this step, you multiply the percentage of completeness for ending work in process inventory with respect to direct materials and conversion costs by the number of units in the ending work in process inventory. In our problem, we had an ending inventory of 400 units. The 400 units were 40% complete with respect to direct materials. The 400 units were 25% complete with respect to conversion costs. So what we do here is we multiply the 40% times 400, and we get 160 units. We multiply the 25% times 400 units to get 100 units. So the equivalent units in our ending work in process inventory from a materials perspective was 160 units. From a conversion perspective, again, which includes direct labor and manufacturing overhead, were 100 units. For our third step, we determine the equivalent units of production for both direct materials and conversion costs. We calculate the equivalent units of production by adding the units completed and transferred out to the equivalent units for the ending work in process inventory. In our example, 4,800 units were completed and transferred out. So for direct materials, we take the 4,800 units and add the 160 equivalent units produced in our ending work in process inventory to get a total of 4,960 units. For conversion cost, we begin with the 4,800 units that were completed and transferred out and add the 100 equivalent units produced that are in our ending work in process inventory for a total of 4,900 units. Step 4 requires that we compute all applicable costs. At this point, we're not working with units anymore. We are working with dollar amounts. To do this, we bring forward the cost of units in our beginning work in process inventory for the current period. These costs are broken into direct material and conversion costs. We take the beginning work in process inventory and add to it all production costs added during the period for both direct material and conversion to get the total cost amount. In our example, the beginning cost for direct material was $9,600. During the period, we added $368,600 for a total cost of $378,200. On the conversion side, we started off with $5,575 in our beginning inventory. During the period, we added another $350,900 to get a total of $356,475. When we add those numbers across, we have a beginning work in process inventory that totals $15,175. That $15,175 was made up of direct material and conversion costs. In other words, direct material, direct labor, and manufacturing overhead. During the period, the total cost added was $719,500. Adding that amount to the beginning balance of $15,175 gives us the total cost to be accounted for of $734,675. That amount being made up of both direct material and conversion costs. During the fifth step, we determine the cost per equivalent unit. The cost per equivalent unit is determined by taking the total cost of direct material and the total cost of conversion costs and dividing it by the equivalent units produced. So in our example, for direct materials, we're taking 378,200 and dividing it by 4,960 units to get a cost per equivalent unit of $76.25. On the conversion cost side, we're taking the total cost of $356,475 $19,475, dividing it by the equivalent units produced of 4,900 to get a cost per equivalent unit of $72.75. Now that we have determined the cost per equivalent unit, we can move on to step 6, where we assign the cost to the ending work in process inventory as well as to the units completed. To assign cost to the ending work in process inventory, we take direct materials, the equivalent units produced of 160, and multiply it by the cost per equivalent unit of $76.25. When we do the multiplication, we get $12,200. For conversion costs, we take the 100 equivalent units produced in the ending inventory, multiply the 100 by $72.75 to get a total of $7,275. We add the direct material total of $12,200 to the conversion cost total of $7,275, and we get a total value for the ending work in process inventory of $19,475. So at this point, we have assigned cost to the ending work in process inventory. We've assigned it based on the equivalent units produced and the cost per equivalent unit. Now let's move on and assign cost to the units completed. In this case, 4,800 units were completed. So for direct materials, we take 4,800, multiply it by the $76.25 cost per equivalent unit, and gets $366,000. For conversion costs, we take the 4,800 units, multiply it by the $72.75 cost per equivalent unit, you get $349,200. To determine the total cost assigned to units completed, we add the $366,000 for direct materials to the $349,200 for conversion costs, and we get $715,200. At this point, we've assigned our cost to the ending work in process inventory and to all work completed during the period. The seventh and final step requires that we prepare a cost reconciliation report. For this step, we will reconcile the total cost to be accounted for with the total cost accounted for. The total cost to be accounted for is equal to the cost of the beginning work in process inventory plus all costs added to the production process. The total cost accounted for represents how those costs have been assigned to the ending balance for work in process inventory and for all production completed and transferred out. Having the two amounts equal illustrates how all costs incurred have been assigned for the period. For our problem, the cost to be accounted for included the cost of beginning work in process inventory totaling $15,175. The cost added during the period was $719,500. The total of those two amounts gives us a total cost to be accounted for of $734,675. Now to show how they're accounted for. They're accounted for in the ending work in process inventory of $19,475 and the cost of units transferred out of $715,200 for a total of $734,675. Because the two amounts are equal, we have reconciled the cost incurred during the period with how it was assigned. This slide attempts to summarize the concepts which have been presented. Pause the video to see if all makes sense. If not, note those items that are unclear and view the concept again. That completes the video on process costing. Thanks for watching. Time again to practice, practice, practice. Good luck.